Hello and welcome to the August 15th edition of the Gold, Goats, and Guns Market Report. My name's Tom Luongo. Wow, let's do this. Been handicapping the sovereign debt crisis for a while, and I think it's beginning to finally take off. That cannon is looking like it's kind of prescient at this point. All right, let's get to it. All right, Euro. Let's talk about Euro. Let's talk about the contagion that's happening thanks to Turkey. It's not just Turkey anymore. Earlier this week, the Brazilian real broke down, the Argentinian peso broke down, the South African rand broke down hard. But the biggest problem is Europe. And behind the scenes, I was reading a blog from Martin Armstrong this morning, and he said that behind the scenes, his phones are in meltdown mode as money managers and central bankers around the world are trying to figure out what's going on. They're really worried because European banks loaded up on incredibly cheap Turkish corporate debt that was paying 15 to 20% during Draghi's insane negative bound interest rate policy. And this is what has driven Turkey's massive current account deficit, and it's what's driven this massive pile of dying debt. And as I've said many times over the course of the last couple of weeks, when you have a position that's that large, you have leverage with your counterparty. When you owe the bank $1,000, it's your problem. When you owe the bank $222 billion, it's your problem. I'm going to continue to pound this point home until we all understand it. And so that's what's going on here. And that's why the euro is failing. That's why we're short the euro in the Gold, Goats, and Guns investment portfolio as one of our currency hedges in the guns portfolio. It's why all of this is happening. I could see this stuff coming earlier in the year when Trump started to go on his sanctions rampage and his trade and tariff rampage. And so here we are this morning, and it's Wednesday, and the Turks are just beginning to start rolling out capital controls. The Russians just announced that they want to do a bilateral trade agreement with Turkey. Guess what's next after this? Expansion of currency swap agreements, both between Russia and Turkey and China and Turkey. You wait for this. The Turkish lira has already responded strongly to the capital controls. It's trading down around 6 right now. It hit a high of 7 on Friday, and it's been trading down all week. The Turkish central bank just burned a lot of shorts, and so there's some short covering going on this morning. That doesn't mean that the Turkish lira is out of the woods. What it means is, in the short term, everybody's having to respond to the changing conditions, and the panic is now swung to the other side. It doesn't mean that 3 days later the panic won't reemerge, right? This is move, counter move. This is two heavyweight boxers, whacking each other over the head. And we're in kind of rock'em sock'em robot mode now between the American government and the Turkish government. And we're going to see how this plays out. But the secondary effects are what's the more important part, and this is where Turkey has its leverage. Gold is getting whacked on liquidity concerns. Bitcoin dipped below 6,000 on Sunday, and it's trading back up around 6,400. I'll show you the charts this morning. We're seeing safe haven flows into things like the Swiss franc. People are selling the euro and buying the Swiss franc, along with selling the euro and buying the dollar. There's a lot of stuff going on here, and all of these traditional kind of safe haven flows, copper's down, for example. All these indicators are here. Now, gold's supposed to be a safe haven asset, and it is, but not during times of extreme dollar illiquidity. When that happens, gold gets sold first, and so don't panic here. Okay, this is a great opportunity because this is the setup we need for everybody to hate gold. And then once everybody hates gold, then the shorts are going to get burned. The same way that everybody hated the Turkish lira on Friday. And you see the massive move that we've seen in just 3 days. And we're going to see the same kind of thing happen in gold because at some point, confidence in Mario Draghi, is the head of the ECB, is going to fail. When he is exposed, as Warren Buffett has said, when the tide goes out, we find out everybody who's been swimming naked. And frankly, Draghi is the most naked of the bunch. He and Kuroda over at the Bank of Japan are absolutely naked here. And the Fed's not going to do anything to help them because Donald Trump doesn't want to help Europe. Donald Trump fundamentally sees the European Union as a tyrannical entity. and one that needs to be broken up and destroyed. I fundamentally believe that. And so you need to be bearish on Europe here because the forces are arrayed against them. And their own policy is arrayed against them. And the very, very powerful people who have backed Europe to this point and backed the destruction of the United States and the elevation of the European Union are screaming right now. And all of their mouthpieces, the Financial Times, Bloomberg, the Wall Street Journal, all of them, they're all screaming right now for Turkey to take on an IMF bailout loan, for capital controls to be put on, for the Turkish central bank to raise interest rates to 30%, to do something to stop all of these, to stop all of the hedging contracts and the interest rate contracts to blow up, to keep the central banks from having to bail out hundreds of billions of dollars of toxic sovereign and corporate debt, and deteriorating bank balance sheets where capital adequacy ratios are deteriorating on a hour-for-hour basis. Okay? It's going to get far worse before it gets better. So the euro trading at $1.20, $1.13.2 this morning. It's a good start. I'm looking at parity on that first leg of this trade. Okay, and then we start to look at what's happening in, and then geopolitically, we move to the Caspian Sea. And after 20 years, these guys have been arguing, the 5 countries that border the Caspian Sea, Russia, Iran, Kazakhstan, Turkmenistan, and Azerbaijan, have been arguing amongst themselves as to, how to use the Caspian Sea. No one wanted to, the Iranians didn't want to sign a deal. They couldn't agree on usage rights or anything along those lines. And then all of a sudden, Putin goes over there, they all sit down, and then within an hour or two, they hammer out a deal. If you don't think that that's a major shift in Central Asian policy, you're crazy. It means now that Azerbaijan is effectively out of the United States' sphere of influence. It means that there will be no movement of U.S. troops across the Caspian Sea going forward. They have agreed upon how they're going to fish and explore for oil and gas and all of that stuff. It's all been agreed upon now. It opens the path for trade and multi country infrastructure projects. You wait, you're going to see Gazprom make a deal with one of those 4 countries over a pipeline coming out of the Caspian Sea. It's like night follows day here. Just watch what happens. And so you've got gold travails. Now you've got Russia, and Russia derails. And not that Russia's economy is derailing. It's derailing the U.S.'s plans to destroy Turkey by offering up a bilateral trade agreement. Okay. The Turks this morning put on counter sanctions against the United States. We doubled the tariff on steel, so they've put up massive tariffs on rice and alcohol in a Sunni country. Wow. And on cars. I'm sure there's not a whole lot of American cars sold in Turkey. So the whole package, again, comes to about $1 billion, just like the American sanctions did. Or American tariffs did. It's the rice that matters. This opens up all new avenues of trade. Okay, this gives Thailand an opportunity to sell the Turks a bunch of rice. It gives India or Vietnam it's going to significantly shift the way the base level economy in Turkey functions. It's not going to function with dollars anymore. It's going to function with different currencies, and that's how they're going to get out of it. So you wait. We've got offers of bilateral trade agreements. Swap lines are up next. All right, let's get to the charts, and then I'll get you out of here. All right, so let's look at gold. Gold is very weak this morning. We broke down below support at 1208, and you can see that here on the chart. And this is not particularly strong support, so I'm not surprised that this failed. But there's a cluster of support here between 1195 and 1210, right? There's all these long tails in here. During this bull wave, there are a lot of buyers in here. But at the same time, it's easy to move gold down if the markets are under extreme stress. So right now we're trading below this level at 1196. If we close this week below this level, guys, I'm telling you, we're going to 1125. We're going to the 2016 low, or at least we're going to approach it. Whether we close somewhere near it or not is a different story. This is the monthly chart, so I want you to understand what's happening here. Now we've got a 5-month downtrend. And so that puts the trend reversal at around 82%. I will not be surprised to see a spike bottom here in gold this month and move higher, but it could move into September. The volatility that we're going to be seeing over the course of the next few weeks could keep gold in a very bearish position, and we'll see even more weakness and even more people puking all over gold and saying it's worthless and it doesn't work anymore, and throwing their hands up in the air. It's going to be great. This is exactly what you as a contrarian want. You want a blood in the streets moment. And if gold can put in a blood in the streets moment above the 2015 low or even the 2016 low, my God, what it's going to look like when this thing finally breaks through 1375. That's what you're playing for here. That's the long-term play. Okay, that's the big trade. Okay? So don't weep for gold. Gold will be fine. It's going to hurt in the short term, but it's fine. All right, now let's look at the euro. Now, I told you that the euro is breaking down. So there's no reversal probability percentage here on the monthly chart because, we had a 3-month downtrend, then an uptrend. This doesn't, one month is not a trend, so it doesn't really matter. But look at the big breakdown here. We had 5 attempts to break down below $1.15. And we got this bounce off of $1.15 here, which sent the euro up around $1.26. And then since the beginning of the year, the euro has been in decline versus the dollar. And even 3 months in a row during Q2, they tried desperately to hold the $1.15 line, and it failed. We're now into Q3, and you can see how this is breaking down. So if you were to extrapolate this out to the quarterly chart, this is a massive breakdown on the quarterly chart as well. Now, the interesting part about it is the breakdown on the quarterly chart, the reversal signal was already given in Q2 here back in April. So this is just an extension of the longer-term breakdown of the euro. All right? So no surprise to me at all. This is actually May, sorry. So in May, we had the big breakdown. This would be Q1, this would be Q2, this is Q3. And so you can see that this trend at a quarterly level has been baked into the cake for quite a while now. And when you're dealing with big charts like quarterly charts and even yearly charts, that's when you get your major trend signals. And so right now, the long term, or I guess you could call it the medium term, the 18-month to 2-year term on the euro is extremely bearish. And I'm looking for parity with the US dollar. I'm looking for a move back down to $1.03 and possibly even lower, significantly lower if we have a full-blown sovereign debt crisis. All right, let's move on to Bitcoin. All right, so as we've talked about Bitcoin for the last couple of weeks now, this is again the weekly chart. I'm not going to put up the monthly chart because there's not much to say. What's important here is that you've again, every time Bitcoin seems to drop below 6,000, we see another strong bid, and this week is no different. Okay, the breakout from 2 weeks ago destroyed and extremely bearish 2-week move down, but this week we're starting to get a little bit of a firming here. We did violate last week's low, so that's been done. So now that puts an upside to any rally we have this week at around $7,200 because the probability of an engulfing bar here is going to be low, around 12, maybe 15%. So the big bet here is that Bitcoin stabilizes here, and then maybe next week decides to move up towards 8,000. What we're looking for here in Bitcoin for the next 6 weeks or so is a stabilization in the 6,000 to 8,000 range. That's what we're looking for. And that should be your best case scenario. If it does better than that, count your blessings. But if it doesn't, that's what you're hoping for. Because otherwise, you're looking at 4,000, 3,000, and below. All right. So that's what I have for this morning here on Wednesday. Sunday is going to be very interesting. We'll have weekly closes to talk about on Wednesday and on Sunday, and we'll have a better look at what's actually happening in the world. And I expect this Friday to be a whirlwind of news after the close. And so you might want to tune in to the Friday night live stream at 9 o'clock, where we'll probably discuss a lot of this stuff. All right, you guys take care. You have a great afternoon, and we will talk soon. Keep your stick on the ice.